All right, folks, back to work. We got some more money to make this week, don't we? But we talked about this last week, the tariff talks over the weekend, spooking the markets, that big collapse overnight. Well, now look what happened. The buyers are back in control of momentum. And most importantly, we just finished off this day today with a strong pop higher, a gap up to close the gap left over from the weekend behind us. So that strong pop up, that gap up we just saw is a huge clue for tomorrow. In fact, it unlocks one of my favorite chart patterns. If we're lucky, this one chart pattern, if we get it, could make tomorrow a very easy day tomorrow in our trade room. So I am very excited for tomorrow's trading session. You should be too. I have a number of great trades we'll talk about in tonight's video. By the time we're done tonight, you'll have an easy roadmap, a game plan to make some money tomorrow morning as well. So enough of the intro. Charts look fantastic right now. Let's go find some more winning trades. S&P SPY is already, as you can see, Nasdaq, triple Qs already as well. I have 4 very important clues on these charts tonight that are telling me where I think the winning trades are waiting for tomorrow. 2 of those 4 clues are right here on the hourly chart. If you recall, we had a bullish market here on the S&P and SPY, and we've now turned into what looks to be like one big trading range. Now, ranges, they love to rotate down, up, down. And it looks like right now, the S&P SPY trying to finish off their rotation back up to range highs. Similar situation here on the Nasdaq, right? Nasdaq, you'll see here, was basically a bull move up into a trading range. And again, ranges love to rotate. They rotate below, they rotate above, they rotate below. And at this point, it seems like buyers are trying to finish off the rotation back higher and take out some recent highs from late last week. That range rotation is one big clue on the hourly chart. There's one more big clue though. Anytime we see a very strong move in one direction, and of course a very strong move on the Nasdaq and the triple Qs. Now, why is that a big clue? Because as we saw basically 1 week ago, anytime we see a strong move in one direction, we know the sellers are going to try to retest that low. Anytime we see a strong move down. Now, given the buyers have made a miraculous recovery this afternoon, and we do look pretty bullish right now, but be prepared. Sellers are going to be trying to take out that low, and that may give us a gift for the buyers tomorrow. We may get a nice buy the dip moment tomorrow, and we'll cover that, of course, tonight on this video. But that is one more important clue. Don't completely count these bears out just yet. That strong move down, the bears will try to shoot this thing going lower, and I'm going to give you guys a game plan to capitalize on that in tonight's video. Now, I have 2 more important clues, which will, these hourly charts, they're great for the big picture, but they're not good for timing entries. We're going to drill down to some faster time frames, some tick charts in a moment, and put 2 more important clues together and talk about entry timing. But before we dive into that though, let's talk schedule for tomorrow. There's 2 things on my mind. First thing is the job openings, layoffs, and transfer survey, a very important number coming out tomorrow morning at 10 o'clock Eastern time. Keep that on your radar for an increase in volatility, and beware tomorrow afternoon after the close from AMD and most importantly Alphabet, Google, Tuesday afternoon, Thursday afternoon. So tomorrow and Thursday afternoon, just be careful late in the day because markets do funny things a couple hours into big earnings. So Jolt support tomorrow at 10 o'clock Eastern time. Keep that on your radar. And just please be careful late in the day tomorrow because, again, markets get a bit weird ahead of big earnings. Let's now dive into the charts again, though, because it's good to know when the news is, but the money is made on the charts. I mentioned earlier on the introduction here right now, we are range rotation, right? Range rotation, and don't count those bears out just yet because of the strength of that move going lower. I also mentioned too, we're not going to trade off a time chart. I always use tick charts in our trade room because tick charts make entries easier because they make pattern recognition a whole lot easier. And by the way, all the time frames you'll need in case you're watching for the first time tonight in the upper left-hand corner. And this, my friends, is the only indicator you need to find winning trades each week. That is the 21 EMA. I promised you 2 more important clues on these tick charts. 1 clue, multiple trading ranges. Range right there. Range right there. Now, why is that a big clue? Well, because one of the most consistent things I know about my almost 20 years of trading is that breakout pullbacks are one of the most valuable setups that we get. Think of this area now as unfinished business, right? That breakout pullback zone. And remember, the hourly chart has that big strong move down overnight. That big shot lower could pull back right into that breakout pullback zone. This would really be one of my favorite trades here for tomorrow. We're going to cover that a bit later on in the video. So do not cut off this video early. If you want to make money tomorrow, watch all the way to the end. The second range is right here. Now, why is that important? Well, because if we keep going overnight, now a breakout pullback off that range is very likely. We're going to talk about that and break that down in a moment. Remember too, though, ranges love to rotate, right? The amount above, the amount below, which again, if the rug gets pulled out, which seems a bit unlikely right now, but my job is not to make predictions. My job is to take what I see in front of me and put the game plan together, no matter what we get for tomorrow. So if we do rotate, boy, does that line up so well, right along with that breakout pullback area. The most important clue for tomorrow, though, is the way this thing popped into the close. The way it popped, the way it gapped up into the close or to the open and filled that gap, that pop higher here tells me that we may stick up here and go into a new trading range. And if that happens, this opens up one of my favorite chart patterns called a slingshot reversal. Think about this. We know we have a range right here. That range is begging to get a breakout pullback. What do ranges love to do? Ranges love to rotate. So if we're lucky tomorrow, this thing will stick up here, go sideways. We can combine the previous trading range for a breakout pullback. And remember, ranges love to rotate. The amount below the range, the amount above the range. I call these slingshot reversals, the way they slingshot off of that low. Okay, I want to break this down into bite-sized pieces so you can trade this stuff and make money tomorrow. And again, a bit later on in the video, I want to talk about if we do get that rug pull, because that might be a bit tricky, right? Because that momentum will be pretty scary. I'm going to give you guys a roadmap on that a bit later on in this video. Again, if we're lucky tomorrow, we'll end up going sideways up here. And that sideways range, what we'll do is it will anchor the market going higher. It also makes sure that that previous range now is your breakout pullback. Now, let's be honest here, right? I'm pretty good at this stuff, but I'm not that good to pick bottoms on this. I'm not gonna blindly buy that breakout pullback off that previous range. What I'll do is I'm gonna wait for a pullback. I'm gonna use the 21 EMA for 2 types of bear trap patterns. One is called a failure pattern. You'll learn this in our free video class, of course. It's bears once, it's bears twice, and squeeze stops. If I can get these bears trapped selling short below that 21 EMA, I can buy into their stops and squeeze those stops higher. Now, where does the market want to go? It wants to slingshot. It wants to rotate all the way up. So now a second type of bear trap entry is basically a technical bear trap. Higher high in price and move right below that low. Now, the secret to adding on to your winners is to get some separation off that moving average. So one trade I'm hoping for tomorrow is a slingshot reversal. We go sideways overnight, that range becomes a magnet. The previous range is now right for a breakout pullback. I'm not going to blindly buy. I'm going to let the bears come in, try once, try twice. I call these failure patterns in our trade room. That allows me now to buy into their stops. And then once we go higher, remember the key here is that separation off the moving average. We pop up, we pull back, we go higher. I want that first pullback right below that low, and promise me on a trade like this, do not cut that winner early. Half comes off at that high of day. The other half is left now for a runner back up to take out what we call the pendulum swing. Now, that is my favorite trades here for tomorrow. But what if we don't go sideways, right? What if we keep on grinding higher here overnight? I want to talk about that in a moment. Before we do that though, let's slow down for a few moments because I know most folks watching right now, you know these patterns already. You're making money with these already. But if you're here for the first time right now, this might be a brand new strategy, a brand new language I'm talking about right now. Don't you worry though. I teach the entire system, the entire roadmap. In fact, I have a ton of examples of failures, bear traps, range rotations. I want to share. I have so much more I want to share with you. What I'll do is I'll put a link up top here for you, upper right hand corner. Grab that link that popped up there and take that free trading course, because the strategy I teach in that short video series will teach you a stupidly simple trick we use in our members trade room that literally tells us exactly where the winning trades are found each morning. More importantly, I want to teach you my 4 favorite entry setups, entry triggers, so you can time better entries and start making a lot more money. Guys, the markets are way too good right now not to be making consistent profits. So if you're tired of missing the best entries each day, if you've lost your confidence in your current trading strategy, again, hit that link that popped up there. Watch that free video course. Everyone loves the trade examples I include in that short video series. The best part is it is 110% free for you. And keep in mind too, guys, I'm going to put all the important links we talked about tonight. I'll put everything you need to learn more in the description of the YouTube video. Start first with that free video course, learn the roadmap, learn the setups. Most people, guys, they start making money on their own just from that free video series. So start there first. And don't forget too, I post a ton of charts and videos on Twitter or X during the day. If you're on Twitter X, give me a follow. Mindset stuff, chart updates in between these videos here on YouTube. But again, all the details you'll need to learn more and hopefully earn a lot more are linked up there for you in the description of that YouTube video. Okay, so where did we leave off? Yes, I talked about the slingshot, right? That slingshot. We go up, we go below the range, we trap the bears in, and we slingshot running higher. That would be a fantastic one for tomorrow. But let's face it, right? This big move down, that big move down just evaporated. This thing may keep grinding higher overnight. We may not get a range up here. We may not get a deep pullback for tomorrow. We'll talk about the deep pullback in a moment. We may not get it though for tomorrow. So watch closely here. If we keep grinding going higher, the pattern I'm looking for now is basically a breakout pullback off this trading range. There are 2 types of breakout pullbacks I look for. One is the most common. It's a separation off the moving average. It's a higher high in price, and we're buying right below that low. Again, a classic bear trap pattern like I teach in our free video classes. Now, one thing about ranges, when ranges break out, the breakout leg is the measuring leg, okay? That means once I know how deep that pullback is, I can use the size of the breakout leg, combine that with the pullback here to find my targets up top here, okay? Now, once we reach the measured move, we take our profit, we don't buy up here anymore, and now we look for what is basically a breakout pullback. Now, when I say breakout pullback, I think about a two-legged pullback. Two-legged pullbacks are just like they sound. One leg, get below the moving average, and 2 legs. Think about a measured move. If we're lucky, that 2-legged pullback will also line up right around these prior highs. Now, this will give us the entry location. It doesn't tell us to buy at that point. What tells me to buy now is once I get that pullback and I start seeing these bears trying once, trying twice. Now, why twice? Because I want those stops, right? I want to get those stops to squeeze, right? On these deep pullbacks, it's tough to pick a bottom. It is, right? There's no indicators will do it. It's tough to pick tops and bottoms, period. So rather than blindly buying this, we may keep going lower, right? I don't have a crystal ball for tomorrow. I'm going to wait for bears to try a couple times, squeeze their stops, use what I call a failure pattern in our free video classes. Then as we're going higher, where does the market want to go? It wants to go back and take out that big high. Now, if you want to make more money, add to your winners. How do you do it? You do it with that same pattern right there. It's a shallow pullback. It separates off the moving average. It's a higher high in price. Again, I can't emphasize enough how important it is to separate off that moving average. That pullback will not pull back. Like over here, right? Look over there, right? That separation right there. See that? We go up, we pull back, higher high in price. It is no surprise everyone bought that pattern right there. That is exactly what I'm talking about, right? Up here, again, as we're going higher, get me some separation off that moving average, buy that bear trap, finish off that measured move. That gives us our profit target. Then we stop buying. One, two-legged pullback. Again, we don't pick that bottom. That gives us the general area. We trap the bears in again. Again, a bear trap. I call these failure patterns. Anyway, technical bear trap going higher. Again, it is that separation of the moving average, higher high in price, and right there, that is a gorgeous way to add to your winners. That is one type of breakout pullback. Another variation of that, and we'll go grab the Nasdaq here and talk about that big move down. Another variation of this is every once in a while, and again, a lot of this is because of that end of the day, that strong pop up into the close is the giveaway. We may wind up grinding quite a bit going higher, right? It looks like once again the markets overreacted, the tariff talk, and just like last week, right? Just like last Monday, Tuesday, they overreacted, and then we may keep on grinding higher to kind of regroup where we came from last week. The bottom line is, if we start grinding higher here, all we do is we draw a trend line at the highs, we mark a trend line off the lows. That gives us now a channel. Okay, now watch very closely here. The goal here now is to look left and find some of these prior swings. These prior swings are where the money is. What I want is I want to find one of these prior swings that lines up right around the low of that channel. All right, that's the technique if we pop and begin to grind going higher. Remember, anytime we have a grinding market, anytime a market grinds, it's very difficult to get a deep, deep pullback. So if it grinds higher like this, and again, it begins to separate off that moving average. If it grinds up like this, I can be a lot more aggressive, okay, on the entry. Okay, makes sense, right? Okay, now again, in this entry here, this could be a bear trap. Like I'm showing you here, again, bear traps are always below prior swings. They're always below prior swings, right? Bear traps. Or if for some reason we don't have, for example, if there wasn't a prior swing right there, right? Oftentimes there isn't a prior swing we use. If that happens, we get below the moving average. We don't pick the bottom. We let the bears come in and try once, try twice. Because again, this is a horrible spot to be selling. Right? Tough to pick bottoms. That's a difficult spot to want to sell. Anyone who sells there, we assume it's a rookie, inexperienced trader, tight stop, can't defend themselves, right? So again, it's a bear trap. It's a failure pattern. That failure into that trap combination, right? That add-on going higher. Now, one cool thing about these pop and grind moves is that, again, the breakout leg, in this case, the pop leg, is the measuring leg. Okay, then once we know how deep that pullback is, then we know how big that target needs to be. Remember, the easiest way to make more money is to let your winners ride, right? And of course, the easiest way to let your winners ride is to have a good vision of where the market wants to go. It is so much easier to be patient and let winners run when you know where the market is trying to go. When it comes to breakouts, it's either a breakout grind like this, right? Either it pops and grinds like that, or it pops into a range, right? Or it pops up, right? Two-legged pullback, breakout pullback. It's one of those three scenarios, right? So now we know the game plan if we go sideways, if we go higher. But again, as I mentioned earlier in this video, the hourly charts right now, they make me think we may get a strong shot going lower, and that may not be easy on the emotions. Let's talk Nasdaq now. Nasdaq's waiting patiently over here. I'm with the NQ. I know you're getting antsy over here on the Nasdaq. Okay, over on the Nasdaq, again, it's a little bit different, but very similar, right? It's a bull move up into a trading range. Ranges love to rotate. So not a lot is different there between the S&P and the Nasdaq. I want to talk tick charts. Before we dive into the tick charts though, if you're enjoying this video right now, please help me grow this channel by hitting that like button and subscribing, because YouTube rewards me every time you like, share, and subscribe to this channel. I know we're all busy people. I know it's Monday night right now, so I appreciate you guys coming in and spending a few minutes here every evening on these YouTube videos. So thank you so much for all the support, the like, share, subscribes. Now, over on the tick charts right now, very, very similar we saw earlier on the S&P, right? That range right there. Again, I can't say this enough. One of the most consistent things about trading is anytime we see a range breakout, it is not an if, it's a when. It's pretty much a guarantee. At some point, we will come back into that area for a breakout pullback. And boy, does that line up so beautifully here tonight with the second range, right? The new range. The new range, take the amount above, project that down below, combine that with that channel. I mean, my goodness, right? Is there any better place to be a buyer right now than that 21,272? Now, again, the way that we popped up into the close to fill that gap, that tells me that we may not get that deep enough pullback, right? That's why I began the video tonight with the range play, the slingshot over on the S&P. So the same stuff we mentioned earlier on the S&P can be applied literally directly to the Nasdaq, right? So if I go sideways up here, if we go sideways, it's that same slingshot reversal. If we were to pop and keep going, right? Separation off that moving average. Remember, anytime we see separation on that pullback, we look for those, they're called bear trap entries. You'll learn that in the free video course. And remember, right, breakout leg, measuring leg, then don't chase after it. Wait for that two-legged pullback, right? Off the breakout pullback of this range now. Don't pick that bottom, right? Wait for the bears once, twice, squeeze those stops, right? And run back up and take out that high. That's a very easy way to make money. And the last one would be, of course, if we go higher here, is that pop and that grind, right? If it pops and grinds up, all we do here is mark the trend line, find that channel. And as always, we never want to miss the first test is the best test. Ideally, it's below one of those prior swings. Any of the entry patterns you guys are learning in the free video course can apply to that pattern there as well. Let's now talk about, though, in all reality, what may be the best trade for tomorrow, and that would be a rug pull, right? A nice, strong move lower. Now, what is the challenge on a rug pull? The challenge is I don't know how far that move will go, right? It may go a lot further than this pendulum swing. We've seen how much the tariff announcements are shaking these markets up. So as it pulls back, I can't just simply blindly buy this. What I'll do is wait for a pullback and let the rookies chase after it. When I was a rookie trader, I didn't know how to read the bigger picture yet, right? I used that hourly chart to remind me that if this is a pullback right now, this is the last place you want to sell. You do not want to sell down here. You want to buy this, right? Because we're a bullish overall market on the hourly. So if this is a horrible spot to be a seller, it's a great place for a bear trap. And remember that same failure in the trap combination? Same thing, right? Same thing. Trap those bears in, squeeze those stops. As it runs higher, look for that separation off that moving average and add more as it goes back up to retest that high. Now, there's two variations of this that I want to be ready for. For example, we may not get that failure pattern. We may not get that bear trap pattern down there. There might be so many buyers down here, it may just whoop and run right back up again. If that happens, it will create what's called a V bottom, basically, right? And V bottoms are very simple. If it V bottoms, it will begin to grind back higher. Whatever you do, do not chase after that grind moving going higher here, okay? That voice in your head is going to tell you chase after it. I can almost guarantee it. Do not chase after it. Do this instead. Mark a trend line off the highs. Bring that trend line down off that low. You know this pattern already, don't you? And don't miss that first test is the best test off of that low. I will tell you right now, in a V bottom, it's always a bit disappointing we don't get the entry down here, but I'll tell you, your patience is rewarded in most scenarios. That is a very high percentage trade at that point, because again, we're overall bullish. Momentum's already shifted. Just a matter of getting in on that first pullback. And the final variation of this, in fact, let's do two more variations of this. We got more time here on the video. Another variation is that we oftentimes will get that strong run down. I oftentimes will get a 2-try failure. I will squeeze those stops and get a nice strong run going higher. Now, in the free video course, I will teach you how I use what's called a 1-to-1 target, right? My stop is based on volatility. I use a 1-to-1 first target. Once I get that first target hit, my stop moves up to my point of entry. So a winner never turns against me into a loser. Okay, that's pretty simple stuff, right? Okay, now the underbelly of that range, right, is oftentimes a level of resistance because, again, ranges love to break out pullback. So every once in a while, I will get a good, what I call a failure pattern off that low, but we don't get that continuation back up again. And what's happening is we see another leg lower, okay? This second leg lower, we call this the retest trade in our trade room. You will learn to love the retest trade because what happens is that, first of all, this is not a reversal. This is not a reversal. Again, look at the hourly chart. We're way too bullish right now on the hourly chart to call this second leg down a reversal. Think of it this way, though. Anybody who sells up here, where's their profit targets? Their profit targets are down here. In my eyes, sellers up here become buyers down here, buyers down there. You tell me, is that a good place to sell? No, this is the worst place you want to sell. You're selling a double bottom with a range magnet above us, overall bullish? No, right? Okay, so last place you want to sell, which means it's a great place for a bear trap. 1 try, 2 try, trap those bears in, squeeze those stops, and do not be surprised if this one just rips, right, and runs back up, because this one usually fools a lot of rookies. Buyers like me know how good these work. They pile on and hold that runner. Again, if we're lucky, we'll get the add-on. We'll get the add-on there, right, on the trap going higher there. All right. Again, these retest trades in overall bull market, double bottom retest, that's a gorgeous setup for tomorrow. And one final variation, we'll wrap things up tonight. I want to get that run lower. I want to get that bear's failure back up again. Remember, if all we get is a strong shot lower and it V bottoms back up again, my job is to buy as low as I possibly can. And to do that, it will always be this pattern. All right. Again, I want to buy nice and low. We may get that run down. We may not get the entry. Maybe it's overnight or it's during the news event tomorrow morning. If you don't get the entry, it's all about getting in as low as I possibly can, which means it's all about getting those higher highs in price and getting in below those lows. Get in below prior swings by as low as we possibly can. Right, guys? Boy, I'm excited for tomorrow. That is the game plan for tomorrow. Now, speaking of tomorrow, The place to be is in my trade room, 8 o'clock Eastern time. Guys, as always, I'm going to drop all the important links you'll need in the description of the YouTube video. Start first with the free video classes. Enjoy all the trade examples. Everyone loves all the trade examples there in the video classes. Then come join me in my trade room and we'll do it all together. In the meantime, be well out there. Be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye for now.